We are approaching what is most likely the most important 2 weeks in the market so far in 2025. We are now at the level where we created this Liberation Day gap, saw the largest volume day in 18 years on April 9th, and we have this massive wall of worry here at the 5,500 to 5,600 level on the SP. This is all while triggering the now famous Zweig breadth thrust indicator that showcases positive returns every single time 6 months to a year later. And although most of you understood in the last video what I was saying regarding this indicator, it had a 99% like ratio. Thank you guys for watching. I did receive a few comments that were questioning what I was saying, so I definitely hope to clarify that here. But in the next 2 weeks, we have a slew of Mag 7 earnings with Microsoft, Meta, Amazon, and Apple reporting. We will finally have Q1 GDP coming out on April 30th. Right now, the Atlanta Fed is projecting this to be at negative 2.5%. And we have Jobs Week coming up with ADP non-farm employment change numbers, as well as the infamous unemployment rate. We also have the Fed meeting on May 7th. The Fed is expected to hold rates. The Trump White House wants Jerome Powell to cut rates, obviously. So that is going to be a persistent theme within the next couple of weeks. And this is probably why we saw a massive put order on the S&P 500, $200 million worth of puts that not only came in on Friday, came in after hours on Friday in what is called the curb session. A lot is being made of this, so I will break it down for you. And finally, I will get into my trades and how I'm planning on positioning myself for the next couple of weeks. So without further ado, let's get right into it. So the S&P 500 is coming up on this big wall of worry here. There was a lot of consolidation here around the 5,500 to 5,600 level. This is also the area where we saw a massive cliff dive when the tariffs were announced after hours on April 2nd. If you've been watching my channel, you know that I said it makes sense for the stock market to head towards that level and retest that area because this is where all the bad news started. And after hitting that level from the 2021 highs, the bond market absolutely in shambles. We are now seeing a softening of the messaging from the White House. It first started with that 90-day pause on all countries not named China, and then some more softening talk regarding China about how the China tariffs are not going to be as high as projected and how they are close to a deal, even though China is denying that. But we are now seeing, we had the cliff of bad news. We hit that major support level, and we are now seeing some good news take us back to that level. So it makes sense from a technical and fundamental perspective. And if you're part of the Traveling Trader Trading and Investing Discord, you could see our buys here on Google, Amazon, Apple. I also make a habit out of buying the Qs and the SPY every 10% down. But a lot of people did not get in on the action and they held through all of this volatility, so their portfolios are down. They likely didn't buy anything here, and now they are worried that they missed an absolute discount. So naturally, we're getting a lot of questions of, is the market going to go back down and test these lows? And as always, I'm going to do my best to give you my honest answer based on the latest data that we have and my interpretation of the technicals. I will also tell you what would I do as an investor here if I missed the dip. I've been making YouTube videos through 3 bear markets and 3 corrections already, and every single time it's the same. We get to the lows, people don't pull the trigger because they're waiting for lower. Most new investors and traders, they approach the market as if they're buying a TV during Black Friday. They're just looking for the best deal, and they're afraid to pull the trigger because they think it might be cheaper later. The problem with this type of thinking is it will never be too cheap for some people to pull the trigger. We're going to get to these lows, they're going to wait for lower. I can appreciate that pulling the trigger is one of the hardest things to do as a new investor, but the way to approach this is not as if you're buying electronics during Black Friday or a New Year's sale, but to try to look at the valuations of your favorite stocks and see whether they are trading at historically low valuations or not. I'm not trying to be a hero and say I caught the absolute bottom, but I am trying to be a good investor and say, Amazon is trading at a historically low 15 times cash right now. Will I regret buying it in 10 years? The answer is probably yes, I will regret not buying it in 10 years. So I pull the trigger regardless of what happens in the short term. And I want you guys to think that way as well. So let's pull up the moving averages here. There is going to be a lot of resistance here, in my opinion. We have the gap here from Liberation Day. That is a major level already. We have a wall of consolidation here. We have the 300-day moving average on the S&P 500 here. We're currently sitting at 5,500, and it's lining up with the technicals. We have most of the Mag 7 reporting earnings at exactly the same time. Now, we know for a fact that earnings of these companies will likely be really good. The obvious worry is guidance, and a lot of these companies don't report guidance, by the way. But we will likely get to see some guidance and some reflection of whether retail sentiment has changed from Airbnb, from McDonald's, from Booking, as well as this swath of employment data here. And then, as I said, on May 7th, we have the Fed meeting. So we have this perfect convergence of technicals and fundamentals at this level. To me, this is going to be a perfect area to hedge from, to sell calls, to buy protective puts, to maybe take some profit on your short-term holdings. Everybody is going to be different. Every portfolio is individual. If you are a 20-year-old that just started investing versus if you're a 50-year-old who's been holding stocks for 30 years, your profiles are going to be entirely different. But in general, to me, this is an area of hedging, of taking profit, of buying protective puts, and potentially opening up a short. This was one of the things that confused a very small number of people. But there were some people from my last video that said, oh, I thought you were shorting from here. What happened? And this is all because I presented this data about the Zweig breadth thrust indicator saying that this is a bullish signal. Now, I only presented this as a longer term 100% bullish scenario. As a matter of fact, in my last video, I even highlighted some times when that Zweig breadth thrust indicator did not call the bottom. This happened in 2022. This happened in 2015. And I said it is entirely possible that we trade back down here, even if we make a new low. And I'll show you a perfect example of what I'm talking about that happened in 2022 and still be higher than the level that was triggered at, which was around 5,300, still be higher than 5,300 come April 2026. So I think a lot of newbies, they just kind of merge investing and trading. They confuse them sometimes, and they're not very specific when they ask about bullish or bearish scenarios. I can take a large bearish position for the next 2 weeks and still look at this as a sign that I need to be invested in the market at cheap valuations so that I don't miss the likely outcome a year later, which is bullish. So let's go to 2022 for a second. There was a wave of breadth thrust indicators, more than one, that were triggered here. The market ended up making a newer low just a few months later before bottoming out. If we go to 2015, a bunch of breadth thrust indicators were triggered here. We did rally a bit, but then we made a new low a few months later before finding a bottom. In each of those cases, the market was higher a year later. And I could see a similar situation playing out here where we reject from this area and eventually go back down before finding a new high a year later. As a matter of fact, the next 2 weeks are likely to be very murky. This is what happens when the NASDAQ composite goes up 1% for 4 straight days. For up to 2 weeks later, the results are really murky and muddy. It's not going to be smooth sailing, in my opinion, straight up. And although we saw a wave of buying last week, you can see here there's one dark pool print at 546.72. $2.3 billion order on the SPY alone. There were orders like this all up and down the tape. This is why we are seeing huge hedges going out to June 20th for SPX. This, by the way, looks like a debit put spread, 5,200, 5,400 debit put spread. This is a very nice hedge. If we take a look at June 20th for SPX, you could see that the expected move is around $430. So $430 on SPX this way would put us at around 5,100. So because there was a wave of buying and because of this wall of worry here and because of the potential volatility upcoming, this to me is a very nice hedge. 5,100 would be at around that low right there. Now, I think this gap here on SPX between 5,300 and 5,360, I think it's inevitable that this gets tested. So come Monday, I might buy the 5,300, 5,200 put spread on the SPX. So that would consist of buying the 5,300 put and selling the 5,200 put, or you could sell the 5,250 put if you want a cheaper spread. This to me is a really good hedge here. 5,300, 5,250 expiring June 20th, which would give us 54 days. this is going to cost me $1,200, assuming that the market opens around the same level, which it might open a little bit down in my opinion. But either way, you get the theory here. It's around $1,200 for each contract, but the maximum profit will be like $3,800. So $3,800 would be total profit per contract, because the max value of this spread is the width of the strikes, which is $50, minus 1,200 is 3,800. Now, depending on the shape of the market and my conviction, I typically like to hedge between 10 and 20% of my portfolio. And if you want access to all of my real-time alerts, when I take this stuff in real time, the price that I paid for this, for the option spread, make sure that you sign up below. You can watch me trade futures and options live every single morning as well. And finally, where do I see the midterm outlook for the market? If I'm looking at the NASDAQ chart, which is to me is a lot cleaner than the S&P 500, if I'm looking at the monthly, we are forming this bearish fair value gap here. And we have, what, 3 days left for the monthly candle to close. Unless we see a miraculous wave of buying that invalidates this bearish fair value gap, I think this means that we have more pain and uncertainty for Q2 of 2025. So here's 2022. You could see here that we formulated a bearish fair value gap here as well. If you look at 2008, bearish fair value gap here as well. 2001, bearish fair value gap here as well. But we also had 2018, which had a bearish fair value gap right there. And we basically closed above it and didn't reject from it heavily. In my opinion, how bad this gets is going to really depend on how hard the Trump administration pushes on tariffs and whether yields continue to be stubborn or not. See, the Trump administration is trying to get the Fed to cut the Fed funds rate, which would help bring down yields. But the Fed only cares about two things: price stability and unemployment. If you look right now, the unemployment rate is still hovering at 4%, hasn't really moved since then. And you can see that CPI is actually trending downwards, and it is below 2.5%. The Fed is not projected to cut here. They have no reason to cut. And honestly, this is one of the reasons that we typically get tripped up into a recession, because bond yields remain so stubborn. The Fed can't cut because inflation and unemployment are not a problem. And if these companies come out and say, hey, we are actually seeing the economy slowing down like crazy, and the Trump administration is still pushing hard on tariffs, causing a lot of uncertainty, bond yields are going to be sticky, because bond investors are going to say, we're not really trying to tie up our money here. We need a lot more yield if you want us to buy your debt. Those high bond yields end up crushing a slowing economy, and we get tripped into a recession where then the Fed is forced to cut in order to try to save the economy. That's why this happens all the time. And this is why I said in my last video, even though the breadth thrust indicators are showcasing some strength here, I'm not ruling out a recession further down the road. Now, every recession doesn't have to be 2008, but if this monthly on the NASDAQ closes in such fashion and we don't get any permanent confidence from the Trump administration and the bond market, then I could see Q2 playing out, putting in a new low or somewhere around this low here before the Fed has to cut, implement quantitative easing, treasury buybacks, etc., just in time for a Republican tax cut plan, where then the market continues higher 12 months later. So I hope I made that a little clearer, and I'm happy to answer any good faith questions below. So leave me your questions below. But please recognize that the financial markets are so complex, and there are so many moving parts with regards to technicals and fundamentals. And at the end of the day, you are watching a finance and trading news channel where I'm bringing you this stuff as fast as it comes out, trying to make sense of it and analyzing it the best way that I know how, based on my experience in the markets. And I get that it's frustrating to ride the volatility all the way down, not pull the trigger on any stocks, and then be frustrated when someone says, hey, there's a bullish indicator that's popping up that shows that every time we see this, the market is higher 12 months later. But your job is not to fear the market. There is no reward without risk. You have to pull the trigger when some of these stocks are at valuations that are extremely rare, to be honest. These type of valuation compressions are seen usually once every 4 or 5 years. So in my opinion, if I miss this recent bottom, from here on out, I would only buy on red days. I would not chase price up. I would put together a nice list of stocks that I want to own based on how much cash they generate. I give you guys a metric that I normally look at with some companies, whether they generate 10% of their market cap in operating cash flow. I would look at their price to cash flow, see how that fares historically with that company. I would look at their forward PE, see how that fares historically with that company as well. And obviously keep track of their earnings and guidance. And if all that gels and you agree that that's a company that you want to own, I would buy those on red days from here on out, in my opinion. And if you're a trader, well, of course, you're loving this because every day we are getting the volatility that we crave in order to make big moves in the market with a high risk to reward ratio. And lastly, the one thing that will invalidate my thesis here is if we actually end up closing above this the next month, right? I don't think that April is going, we only have like 3 days left. I don't think we're going to close above this, but say like in May that we do close above this on the monthly candle, then I do think we are going to make an all-time high before any potential downside or any potential recession that will come up in the following quarters. I hope this information was helpful. I hope you guys learned from these videos. I hope you enjoy watching them as much as I enjoy making them. Thank you guys for your continued support. If you want to trade live with me every single day, you know where the link is below. And it is almost time for the May personal group coaching where I take 10 traders for 8 weeks. We have a weekly call going over your trades, going over your stats, and I review every part of your trading in order to improve your game as fast as possible. We only take 10 students every session. We get thousands of applications. Yes, you also get lifetime access to the Discord if you are accepted. So if you want to apply to work with me, 10 traders max, link is in the description below. It's a live program with me. I get on a call with you every week for 8 weeks. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.